Hi, welcome to Wealth Spikes, empowering trading and investments. Today, we'll see yet another interesting topic. Are you a good investor or a smart investor? In our trading bay, during COVID wave 1, we had a good investor and a smart investor with us. A good investor continued to do his investments only in the equity markets. One day during COVID wave 1, all of us saw that there was a sudden dip in the market. Market was wiped off. There is a 40% dip. Everyone was shattered, including the good investor. But the smart investor was least bothered. He was least concerned about what is happening in the market. He continued to do his work, least affected due to the 40% dip in the market. Let us see what the smart investor is doing. We try to probe more about his investing pattern. Let us go further. Here, the smart trader cum investor has told us how is he managing his money. Child's higher education, child's marriage, his own retirement. It is sensible to save money for families' financial goals and keep them financially secure. The negative effects of inflation will hardly leave us with anything in the end. If we choose to save money in bank deposits or any other saving instruments that offers very less returns, while an investment with good returns will keep us financially secure by investing our savings in the right asset class for long term, we can ensure financial security for the future of your family. In this regard, we can guide you to get into the right assets with our automated asset allocation and scheme selection platform. Let us go more. How inflation is the biggest hurdle in your financial goal achievement? As per RBI estimates, the wholesale price index inflation has grown by 6.5% in the last 30 years. In the year 1990, cost of milk per litre was just 6 rupees. In 2003, it went up to 13 rupees. In 2020, it touched 60 rupees. Milk is having an actual inflation of 8%. Similarly, diesel is having 9.9%, petrol at 7.2%, gold at 9.3%. Here, you can see how inflation is eating your money. Reduced value of money at the rate of 7% inflation per annum. For example, in the year 1990, you were able to buy so much for 1 lakh. Similarly, if you see on the right side end, the same 1 lakh has become 11,300 in 2020. That is, the value of your money has gone down so badly. The sources for this is from RBI and Bloomberg. Data source, I said. When we go more, where is inflation literally choking us? Household expenses, for example, if you see, in the year 2010, it was costing 20,000 to run a family. An example, 2020, it costed 35,000. In the year 2030, it will be costing you 75,000 to run a family per month. Please remember this. Next comes higher education. 2010, it was costing only 6 lakhs. By 2030, it will be costing you 50 lakhs. This is a source from IIM Ahmedabad as per their fee structure. Here, 2030 rates calculated at 8% inflation over 2020 prices. The actual inflation in education cost is around 14%, but what we have shown you here is only 8%. So the actual inflation in education will be much higher. Similarly, for marriage cost, 2010 it would have costed you only 6 to 7 lakhs. By 2030, you had to spend 26 to 30 lakhs. Huge. What is the right way to go about it? How do we solve this? Simple, smart and time-tested formula to achieve your goals. Start early. If you're not started early, please start now, right now. Invest in the right asset class. As we have already told, we will help you to choose the right asset class based on your risk appetite, based on your financial goal and based on the longevity, whether equity, debt or whatever. Then please save regularly. Get into the systematic investment plan, SIP. Every month you pay. You can easily achieve your goal. Here is another example. When you start early, give time to your investment rather than timing and benefit from the power of compounding. Systematic investing has a compounding effect on your investments. In the long term, an investment as low as 10,000 rupees per month swells into a huge corpus. This can be best explained by the following graph. The graph shows advantages of starting early. If an investor starts early, even with the lower invested amount, he can create a large corpus. On the left, you can see Mr. Early. On the right, you can see Mr. Late. Mr. Early is starting his investment journey at 25 years, but Mr. Late is starting at 45 years. Mr. Early is saving at the rate of now 10,000 rupees per month, but Mr. Late is contributing 25,000 rupees. He is contributing more. Investment till the age of 60 years. Mr. Early saves for 35 years, but wherein Mr. Late saves for 15 years only. Total amount invested by Mr. Early is 42 lakhs, wherein Mr. Late has invested 45 lakhs. He has invested more. So, wealth at the age of 60 years, Mr. Early is getting a whopping 11.41 crores. Huge. But Mr. Late is getting only 1.54 crores. This is the power of compounding in the long run. We have proved it here. The above example is merely an illustration to explain the benefit of investing at an early age. Returns are assumed at the rate of 15% compound average growth rate, CAGR. Assume that SIP investments are done regularly every month. This is a ballpark figure to show you the power of compounding. Next, the right asset class. We have already told you how we will scientifically help you to choose the right asset class using technology. Equity market has outperformed all other investment avenues. Growth in different asset class from March 1981 to March 2020. You can see both the charts on the left and on the right. Let us see the left chart first. We can see right from gold, silver, bank deposits, company deposits and Sensex. Sensex is the last long red bar that you see. Sensex has outperformed all other asset classes right royally. Has given 14% returns. On the right you see the other chart. Here we have shown you if you have invested 1000 rupees in any given asset class, what will be the return that you would have got in the year 2020. Gold would have given you 21,532, silver 16,128, bank deposit 22,000, company deposit 32,000, whereas Sensex will give you or has already given you 1 crore 68 lakhs 540 rupees. That is the power of Sensex. It is evident from the graph that in the long term, equity investments have outperformed other investment avenues and has beaten inflation by a huge margin. Equity mutual funds over a long-term horizon offer better risk-return payoff, plus liquidity, transparency and convenience. Now, you need to invest regularly. Disciplined investing through SIP, systematic investment plan. Every investor dreams of buying at a low price and selling at a higher price. But how does one know whether any given time is the right time to buy or sell? Many retail investors try to judge the market movements and end up losing their money in the long term. A more successful strategy is rupee cost averaging, wherein you invest a fixed amount regularly, thus you purchase more when the prices are low and the purchase less when the prices are high. SIP investments take advantage of this strategy. Here you can see the tabular column. On the left you can see Mr. SIP investor. On the right you can see the one-time investor. 4 months figures are shown. Total units bought in 4 months by SIP investor is 427 units, whereas one-time investor has got only 400 units. Here, the average price bought by an SIP investor unit price is only 9.36, but here by a one-time investor it is 10 rupees, so it is high. He is paying high. The above example is merely an illustration of rupee cost averaging. The NAVs, the net asset value, and the returns generated are the ballpark figure what has been shown. Just to show you the power of investing regularly every month. Time is very important. Market timing does not matter over the long term. Best market timing, almost impossible, has yielded less than 2% additional return than systematic investment. Time to go systematic. That is, you will be getting only 2% lesser if you choose to go the one-time investment, or I will invest whenever the market is low. That approach. Okay, here 3 bars are given. The first one starts with fixed investment at highest Sensex value. You will get 10.47% returns. Next one is fixed investment at lowest Sensex value. You get 12.65% return. But SIP every month will give you consistently 11.62%. This is a period from Jan 1988 to May 2020. Proved very well. Sensex returns. In their 1979, Sensex was at 100. If you had invested 1 lakh, in 2020, Sensex was at 32,424. You would have got 3 crore 24 lakhs 24,000. In the past 41 years, BSE Sensex has given 15.1% returns. Huge. Than the market returns. The power of compounding. Albert Einstein once noted that the most powerful force in the universe was the principle of compounding. In investing, this manifests itself through something called compound interest. Put in its simplest terms, the phrase compound interest means that you begin to earn interest income on your interest income, resulting in your money growing at an ever accelerating rate. Did you know? At the rate of 15% compounding, what will be the value of 1 rupee? After 5 years, it will be 2 rupees. After 10 years, it will be 4 rupees. After 15 years, it will be 8 rupees. After 30 years, it will be whopping 64 rupees. Give maximum time to your investment to get more of power of compounding. Systematic investment plan is a tool that allows you to invest in mutual funds through small periodic installments. SIPs help you set aside a fixed amount every month for investments, thus contributing towards your goals. For investment purpose, we often wait to collect a large amount of money and investment it all at once. That is, here he is talking about a one-time investment. Through SIP, you can start with similar amount on a monthly basis and create a wealth over the longer term. This is the advantage of SIP. Benefits of SIP. What we discuss now. Imparts financial discipline to life. You will not miss your SIP on a monthly basis. More discipline. Invest irrespective of market conditions. We have already seen the example. Cost averaging helps neutralize market volatility. We have already seen how we gain out of this. Get benefit of power of compounding, the most powerful tool of SIP. Each drop of water is essential to make a mighty ocean. Every rupee saved is a rupee earned to secure your future. SIP performance. Equity not risky in long term. Performance of SIP is diversified equity mutual funds. That is, in diversified equity mutual schemes. 15 years performance on 25,000 invested per month. Here you can see 2 categories. Mutual fund schemes, average CAGR, compound annual growth rate, comes to 11.10%. Whereas in Nifty 500, top stocks, okay, Nifty 500 stocks, second one what you are seeing, is at 8.24 CAGR. It is giving lesser returns. So, average of mutual fund scheme has given 1 crore 10 lakhs 22,520, whereas even Nifty 500, the prime index, has given only 86 lakhs 65,350. SIP is at 25,000 per month. Invested value is 45 lakhs, wherein the current value is 1.10 crores. Huge. Next. Benefits of doing SIP for long term. For example, if you invest 5,000 rupees every month at a 12% CAGR for 20 years, you will be getting 45.99 lakhs. Similarly, if you are now investing 10,000 per month at a 12% CAGR for 20 years, you will be getting 91.98 lakhs. Similarly, if you are ready to invest 25,000 per month at a 12% CAGR, you will be getting 2.30 crores over a period of 20 years. Here you can see how much you need to save for your requirement in the next 20 years. For example, if your requirement is say 2 crore at the rate of 12% every month, your contribution will be 21,742. If it is for 5 crore at the rate of 12%, your contribution will be 54,356. The entire chart you can see for all figures we have given, just ballpark figures, 1 crore to 10 crore. Here we help you to open up a eWealth account. eWealth account is nothing but a single window access for all your investments, a single dashboard wherein you can see your SIP happening, your lump sum investment. If you want to contribute, you can also contribute the same SIP, or the investment value, the current investment value you can see from this dashboard, your profit and loss reports, your tracking of your investment, your transaction, and we will do our review meets based on this, periodical review meets to see your fund growing. All these things can be done from one single dashboard, all your investments, including insurance, SIPs or trading or whatnot, anything related to investments under a single dashboard. How easy it will be for you to access this dashboard and get information. Next. Here, you can track your goals online. You can become a crorepati, you can buy your dream house, you are giving better education to your children, enjoy a peaceful retired life, or achieve any of your goals. In the last video, I told you about my friend who bought a Rolls-Royce car by investing in SIPs. You can map your goals to your investments, you can track the progress of your goals, you can check how much more investment is required for each goal. As a qualified personal finance professional, we are fully equipped with high-end software tools to assess your capacity to take risk. We can get you customized solution best suited for you based on your requirement and based on your risk appetite. So now we have seen how our smart trader and investor has managed his financial fundamentals very well, wherein all his basic needs are completely taken care. So with SIP, he has made his fundamentals strong. So even though when the market dipped 40% during COVID wave 1, he was least bothered about it and he was comfortably continuing his trading journey because his foundation was very strong, and whatever be the money that he was now making in trading was only add on to the foundation. He was not dependent upon the trading money which he was earning. So now you can decide whether you want to be a good trader and investor or whether you want to be a smart trader and investor. I'm sure that you will say that you want to become a smart trader and investor. If you want to become a smart investor, do join us. Do click on the link given below in the description and kindly give your details. Thank you for staying. Bye-bye.